Hey everyone, this is Kenny P. Wanted to take a quick moment. I actually recorded a chart video earlier today as we got ready for the market to open. And unfortunately, I didn't get a chance to get that uploaded until late. But here's what I want to do. I want to take an opportunity to really now pull up that chart that was marked up in the pre-market and start to look at seeing how the levels were respected. So let's go ahead and jump into the charts and see what we can learn based off of today's price action and all of that interesting stuff. So here's what we have. We took a look at utilizing the volume profile as something that I use as a part of my core tool to get started in understanding where volume has transacted and then where there are opportunities to go back and retest and conduct some business in an area that had not yet had buying and selling transacted, or at least testing that particular price level. So as we kicked off this particular day, I did have a chance to really pull back. And here's kind of a quick summary. I always go to either the daily chart or the 4 hour chart. So let's take a look at the 4 hour chart. I use the volume profile, and then on the higher time frames, I am going to really kind of look at the last 3 or 4 weeks, and this will kind of give me my basis for what's happening in the market in the recent 3 weeks or so. And so over here on the right hand side, you see the volume profile, which is nothing more than kind of a sideways price level chart that shows the volume by price. And so for me, it is like very, very, very powerful to be able to see the price levels that conducted and transacted the most business. And so that's what I use to really set up my levels for each and every day. And then kind of give me my target ranges that I'm going to explore as a part of a trading session. So if you look at this, you can see right here in this particular area, you see a low volume area. The areas where you see the blue and the yellow lines protruding out, we call those high volume nodes. And that's the area that transacted the most business. So based off of all of the candlesticks that we see on this particular chart, this is the area that had the least amount of business transacted. And so I want to draw a rectangle in that area. I draw another rectangle in this area where business wasn't transacted as highly. And then I draw another rectangle in this area as well that kind of represents the top of the volume profile. So I use these to mark out my zones, and then I use those to kind of reference my higher time frame levels. And so when you talk about trading, you want to look at the higher time frames, which gives you the stronger levels and the levels in which a lot of the bigger institutions may target as a part of their activities on a given day, a given week, a given month, and so on and so forth. So these gray rectangles are the levels or the zones that I marked out based off of the higher time frame, which is the 4 hour. And then after that, I will turn off the visible range volume profile, which is what I use to try to capture all of the data that's shown on the chart. It's the visible range. So it gives me the volume profile based off of the visible range, all of the candlesticks that are shown within the chart. And then it gives me kind of the 70%. It gives me the 70% area based off of what is known as the highest area of business transacted on a given day. So based off of everything that's on this chart, we see the blue and yellow areas here. That represents the 68 to 70% total volume that was transacted based off of all of the candlesticks on this chart. And then you'll see this lower gray area that represents the remaining 30 to 32% of the activity that was transacted based off of all of the candlesticks shown on this chart. So I use this each and every day to mark out my zones. And you can choose whether or not you want to target and trade from within the rectangles or using the rectangles to show what could potentially be your bounce areas. And the bounce areas just means it may come down inside of this rectangle and then bounce and go back up towards another rectangle that's shown on the chart. I choose to trade within the rectangles. I want to target the range in between where these high volume nodes are located, because when you get inside of these high volume nodes, it gets very a lot of activity. It gets very bumpy in there because there are a lot of orders that have transacted within this range. And so you'll see a lot of back and forth when you get inside of these high level, these high volume nodes. And when you get inside of the lower volume nodes, there's not as much business has been transacted. And so you tend to get a movement from one side of the rectangle to the other. And that's where I choose to target my trades on a given day or on a given couple days or weeks, depending on if I'm swing trading or day trading. So that's what I do. And then we will remove the visible range volume profile. We will go to the session volume profile, which is simply the volume profile based off of day, based off of a trading session. And then I'm going to go down to the 15-minute time frame. And what you'll notice is that you'll see my gray rectangles. Those are the gray rectangles that were drawn as a part of the higher time frame levels. So you'll see those, and that's typically the higher time frame, the stronger zones that are provided there. And then I'll take a look at the session volume profile. So if you look at this, this is the volume profile from yesterday. And it shows all of the various, kind of price action based off of the 15-minute candles. And basically what I did was I built the zones for the session volume profile based off of yesterday's activity, because that's what we have, or that's what we had in place prior to today's activity really commencing. And so I put blue rectangles that represents the session volume profile levels that I want to be very mindful of when activity goes into those ranges. So at the beginning of the day, we had these particular levels in place. And you can see based off of this, and let me remove, I have a couple of different things on here just from a confluence perspective. So I'll have the VWAP on there to also kind of corroborate the trades that I'm exploring. And then I sometimes will have the movement averages just so I can visually see if there's a trend in place. But if you take a look at what I have here, you'll see, today was an inside day. That means all of the business that transacted did not break above the high of yesterday or beyond the low of yesterday. Everything kind of took place in this range right here. Well, based off of the rectangles that I drew based off of yesterday's levels and the activity that took place yesterday, you can see we pushed out at the start of the trading session. We went up into this blue rectangle right here. And to be honest with you, I try to stay out of the market during the first 15 to 20 minutes to allow it to shake out. But if I didn't have that rule in place, I probably would have jumped in here and I would have taken the trade from 542.46 up to 543.21, and to see if there was an opportunity to kind of push higher. And to be honest with you, I probably would have fallen back and broken even on that trade if I had taken it, because I tend to like to get above the 50% range of a rectangle just so that I can start to take profit. And I probably would not have reached that if I jumped into this trade early on. So what ended up happening is that I waited. We came down and it broke this lower blue triangle or blue rectangle right here, and it pushed down. I jumped into this trade, and instead of getting out, I was distracted. And what ended up happening is that it pushed back up and I got stopped out because I was anticipating that we would get a push all the way through to the bottom of the blue rectangle, which represents a level or a zone that was created during yesterday's session. And I got stopped out. So that was trade number one that I ended up getting stopped out on. After that, we saw just a chop fest for a while, up and down, side to side, sideways price action. And this is for SPY, which is the S&P 500. So we saw a bunch of sideways activity. We saw an opportunity to get in. I was on a call at this time, so I missed this particular push down. And so it came back up. And what ended up happening is that when it pushed down again, I jumped into a trade here, anticipating that we could go down and maybe reach this other blue rectangle. What happened? It pushed back up. I got stopped out, and that really just told me to sit down and really close my computer for the day, because if you see a lot of this sideways chop, it becomes challenging to trade, or the risk reward isn't really there. And as a result of that, I decided to take my two stop outs, close the computer, and really just kind of move on with my day. But this also lets me know, since we traded inside today, that there's an opportunity for us to experience probably a significant move either up to the upside or to the downside once it breaks out of this particular range. So tomorrow I'll be looking to break out of this range because it serves as an inside day, meaning that it did not break beyond the previous day's high or the previous day's low. And so this will be a level or range of interest for me, and I'll be looking for a break to the upside or a break to the downside as a part of the next trading session. And typically on days like that, when we have news, because we'll also have news tomorrow with the Fed releasing information, or one of the Fed speakers releasing information, is going to be primed for at least a move to the upside or to the downside. It really doesn't matter to me. I trade options, I trade futures. I can sell, I can buy in either direction. And so I just really kind of read the charts, and then I'll be basing my new levels off of today's price action. So I'll be targeting in here because this is a lower volume node. That just simply means there was low activity and low transactions in that zone. And so if it goes back into that range, that is going to trade from one side of this range, which will probably start here, and to the other side, which will be represented to about right here. And we will try to capture the trade from one side to the next, and then take the profits and move on to the next trade. But I am anticipating a move to the upside or to the downside with some trend activity over the next day or two. And so we'll be prepared to take those trades when they come up. And this is what I do pretty much each and every day. I will take a look. I'll draw my ranges or my zones, my rectangles. All I do is trade rectangles. And then I take a look at, some of the other items that can help bring and round out my confidence in taking a trade, like this cumulative delta volume delta at the bottom. That's an indicator that shows, kind of the aggressive buying and selling that's taking place. And so if I see a push to the downside, and I also see cumulative volume delta down here with the red candle pushing to the downside, and then I'm also adding on something like the VWAP, which is the volume weighted average price. And if it falls and shows that I'm underneath the VWAP level, and those things kind of all align, we'll have, the blue rectangle will be below the VWAP, which means that we are, kind of following the strength of the sellers at the time. And then my cumulative volume delta is down here, also signifying that sellers are aggressively in the market by this red candle down here. And then I also use Bookmap. And so I'm using multiple tools to try to frame up what's taking place in the market on a given day and during a given session. So that is what I do each and every day. And this is something that you can use to trade the day trade. You can scout with this. And then if you want to swing trade, you can take a look at using the gray rectangles, which are based off of the higher time frames. and use those as your basis for swing trading. So that is pretty cool. And that is all I have for you today. Hopefully you got something out of it. This is something that you can use to really kind of frame up your trades and your plan for the day. I trade nothing but rectangles, and my rectangles are based off of zones that are created by way of volume and price. And so you will hear me say this ongoing. I trade price and volume because that's what truly moves the market. Volume represented by the activity between buyers and sellers. The price is the price in which that volume is transacted, and either you have interest at a level or you don't. So I try to use indicators or tools that will allow me to frame up based off of volume and price. So you'll see me use VWAP, which is a volume weighted average price. You'll see me use the volume profile, which is nothing more than providing volume by price. And then you'll see me use the cumulative volume delta down here as well. And the cumulative volume delta is also showing kind of the price or the strength of aggressive buyers and sellers at a given moment in time, and it just shows you who's very active in the market at that time, and that's what I use. And so you can use this on a 1 minute time frame. You can use this on a 1 week, 1 month time frame as well. So it's up to you how you want to structure your trading plans, and all of that stuff is up to you. But I use rectangles. My rectangles are based off of zones. The zones are based off of volume and price. And that is what I use to frame my trading plans each and every day. So hopefully this has been helpful for you. I'll try to do these more regularly so that you can get an idea of what's going on, and maybe this makes sense to you. Maybe you'll be able to say, yeah, I want to trade rectangles too. As always, feel free to follow me, hit the subscribe button, the like button on this video as well. And we'll do this again. Take care, and we'll talk soon.